Hello guys, very important lesson about the ATR. ATR is the average true range. A lot of people, a lot of books say very incorrect stuff. So today I'm gonna teach you why you need the ATR, how to calculate the ATR, and the most important thing, how to use it. As I said, the first of all, always in theory. So you have to understand what's the most important thing in theory first, and then everywhere else. So imagine yourself, you have a tank of a usually average tank in a big car is about 20 gallons. So 20 gallons, we have about 70 liters. 1 gallon is a 3.5 liters. So we have about a 70-liter tank. So once you put the whole tank, it shows you the average you can drive. Let's say 20 gallons. And the average car is about, let's say, 500 miles. So let's say the car takes 25 miles per gallon, so 500 miles. So once, let's say, the quarter of the tank is gone, you have lower mileage. Half tank gone, you have much lower mileage. Three-quarter of the tank gone, very little left. The empty tank, you cannot go. Same as the ATR. ATR is the energy the instrument has to go. So the very important thing to understand that 75% to 80% of the time, every single instrument goes 1 ATR per day. So the average instrument goes in a daily basis, is the 1 ATR. Very important thing to understand, the 1 ATR is the 1 daily bar. So the ATR, usually average true range, counts in the daily bars. So 1 daily bar represents the 1 ATR. So very important thing to understand, if you want to trust me or you want to check me, take any instrument, take the S&P or take Tesla or take anything else, and you'll understand. Once the instrument passes 1 ATR, 75% of the time, it's going to be the end of the movement of the instrument. So another 10%, usually it's the 2 ATR, which is called paranormal bar. So this is going to be a big bar like this. It's a paranormal. And maybe 5% instrument goes 3 ATR or more. And there is a lot of, let's say, also 5%, the instrument goes less than a half ATR. So this is, and this is, it's called paranormal bar. So we'll go first. So let's say you have instrument which goes like this, and then it goes normal. So 1, 2, 3, 4, 5, 6, 7, 8. Where the number 4 doesn't count because it's the paranormal, and number 5 also doesn't count because it's a paranormal, it's small. So if you take a look at every single book about the ATR, about average true range, you have a calculation of a 7 or 14 days, which is incorrect. I'll tell you why. Because usually the automatic ATR, it takes 1 plus 2 plus 3 plus 4, which is incorrect. Why? Because after you have a paranormal bar, your ATR goes very big. It means your stop loss is going to get bigger, and then it goes smaller, so which is incorrect. So what we usually do in order to calculate the ATR, it's a very simple. So let's say we have this, then this, then this, then very small, and then again normal. So let's say we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So let's say we have a 9 bars. Usually what I do, I take only 5 last bars with the exclusion of paranormally small and paranormally large. So number 6 is out, number 5 is out, number 4 is out. So I take 9, 8, 7, 3, 2, 5 bars. So what I do, I take 1 plus 2 plus 3 plus 4 plus 5, split it over 5, it's equal 1 ATR. So as I said before, the instrument goes 1 ATR 75% of the time. So what does it mean? If the instrument went 1 ATR during the day, the chances it's going to go higher or lower, very small, slim to none. So if the instrument went 40% of the ATR, you have only 60% of ATR left. So this is a math. You can check this out, and it's a very important thing. So once the instrument went up 2 ATRs, it's probably because of the big news of a huge accumulation in the stock. So usually you use ATR in order to calculate the move of the stock probability, and you use it to have a stop loss. So let's say stock is moving from one zone to another, right? So if the stock went 1 ATR and it has ahead of it a very big resistance level, most likely stock is not gonna break it. Why? Because it's already spent so much energy. So remember, in order to understand the ATR very well, you have to understand this is the gasoline in the tank. The more gasoline you spend, the less mileage you left. The less gasoline you spend, the more mileage you left. So once you see that, let's say the stock has already spent a lot of ATR, most likely is not going to be able to go. So this is very important thing to understand. There is a definitely exclusion. And what's the exclusion? The exclusion is if the stock is going up, let's say, to the place it's never been before, let's say all-time high or the all-time low, right? Once the stock goes here and nothing will hold the stock, no limit orders ahead, it can go 2 or 3 ATR. Once the stock goes here, obviously also no limit orders, it can go 2 or 3 ATRs. But in a normal, regular condition, it would take regular condition of the market, right? The stock usually go 1 ATR. And right now we're gonna go to the chart. So we'll take the regular chart, right? Why I said it's very important to take 5 last one. For example, you see, here's the regular ATRs. This is the Uber. Here's the regular ATRs. And now they start to be paranormal. But it would take 5 last one. 1, 2, 3, 4, 5. We're ready. You see why? It will take the 14. So we'll take 5 of those and 9 of those. Our ATR is going to be smaller. But theoretically and technically, I mean, actually not theoretically, physically, the ATR is much larger. So that's why I'm warning you not to use regular 14 days ATR, which is not correctly done. So you take only last 5 days. So if you take all of this last 5 days, paranormal bars out, you'll see this is the regular picture. So if you take all of this chart, let's say you go Uber a monthly, which is not correct because you have to take the ATR in a daily bar. So you'll take this out. You see, it's not that many. It's maybe once a month, twice a month. You see, but overall, otherwise, all the stocks are doing exactly the same. You can take any stock. You can take the Amazon. You see, exactly, it's going to be the same. But if you're going to avoid that calculation, it will calculate all the big bars. Your ATR is going to be bigger. Your stop loss is going to be bigger. Your take profit is going to be smaller. So very important thing, in order to calculate the ATR, you have to avoid a large paranormal bars and the small, like something like this. You see this one, the small one, you cannot calculate because it will bring you the incorrect information. Why? If you're going to calculate the stop loss according to the low and small bar, your stop loss is going to be way too small. So my advice to you, when you calculate, you have to make sure that this is going to be the right information. So very important thing to understand about the ATR. You need ATR as the energy for the stock to go. So let's say if you stay in the beginning of the ATR, you have the all energy to go. Once the stock went up, let's say we'll take Uber, and I give you an exclusion. You see, the Uber right now, he broke almost all-time high. So it can go 2 or 3 ATRs. And this is a very important thing to understand. But Uber goes on the news. So that's the information you have to use once you take the ATR. So good luck to all of you, and I'll see you in the next lesson.